Hi, so during today's video, I want to share with you how you're going to be able to mark up your charts. It's important to you mark up your charts so you understand how, what levels you should be watching for when you're trading Forex, okay? Because markets tend to respect these levels over and over again. This is something that every new trader and even experienced traders should actually bear in mind. Market has got a memory, the patterns repeat themselves. So this is the kind of edge you should give yourself when you're trading. It doesn't really matter what you're trading. You could be trading Forex, you could be trading futures, you could be trading, metals or anything. But you need to understand that the principles of support and resistance. And this is what I'm going to show you today, how I personally mark up my charts, and so that I can anticipate those levels coming. You watch price approach those levels and see what happens when price definitely approaches those levels, and then you can take some action, okay? Just listen here from the Forex trader. And yeah, let's put that to one side and let us open up my MT4 chart here. So what I've got here is a chart of USD/JPY on the daily time frame. If you day trade, it's always best to start analysis on daily time frame, okay? So first of all, you want to pick up the most obvious levels on your chart, okay? So like I said, today is the 4th of January 2020. And yeah, let's see. So price actually, I take this horizontal line tool here and mark off this area. Price has been tested. This zone has been tested a few times. You can see resistance. And if we zoom out a little bit, I'm sure we'll find where price has acted as support. Don't forget that these are not straight lines, they are zones. And I'll show you how they can be used as zones. So as you can see, price has actually come here. It's been tested here a few times as well. So if we insert a little shape here, you can see that price has come here before as an area of interest. It has come here as support here, as resistance in all these areas. Price has changed in those areas, okay, and also acted as support. That is pretty much an important area, if you get what I'm trying to say, okay? So the important thing in marking up your chart is you look for an area on the chart that has acted several times as support and resistance. So we marked up that one there. So what happens is you begin to see what happens when price gets to these areas. I already had this one on my chart before. So if we come on here again, you can see that price has come to this area before, acted as support. Price came onto this area, acted as support here, and yeah, so it's mainly support acted as here. This is quite a strong area of support. And as at the end of business on Friday, which was yesterday, price equally had a reaction here as well, okay? So that is the only criteria you really need. Just keep your trading really simple, okay? So assuming you have marked this off like we've done now, so you see that price has come in here, and there's been a reaction. If I take that off, you will see that price has actually bounced off this level. So this is actually a very strong support level. Although, let me click back and see if it has acted as resistance before. So it's mainly support it's acted as in the past. So it's quite a strong area of support. There is some resistance here as well for price just put this. So don't forget, these are not clear-cut zones, clear-cut lines. They're just like areas of zones actually, okay? So let me zoom back in, and now that we know we've marked out these obvious lines of support, if we go back to the 4-hour time frame, we can see some more obvious levels, okay? So assuming you already had this level marked out, say a couple of weeks ago, early in December, and you can see how price was reacting here, and the price came up to this point and you were day trading. I'm going to give you a classical example of how you could have traded this move all the way down here, okay? Because it's important you understand market structure. Market structure, the price, history tends to repeat itself. So I think it's important you understand that in your trading. So if you look at what's happened in the past, these chart patterns will repeat themselves over and over again, okay? So I think you can even see this line here. If we go on the 4-hour time frame, you can see that it's actually acted as a bit of resistance as well in the past here, okay? And this zone here. So it's quite a strong level. So on the 4-hour time frame, we can even pick out a bit more levels, but we don't want to mess up your chart. So if you are day trading, I day trade on the 1-hour time frame. Okay, so this is how I would have. I think I actually had a trade on USDJPY earlier this week, and I got about 50 pips. Let me go to my Telegram group and find out that screenshot for you guys. I think that was, yeah, that was the USDJPY trade I had. Yep, and I got about 70 pips. I closed this trade on. So you can see I traded this, and it's a live account. I did this last week. You can see the date was well, I actually carried this trade over from last year. I think I entered this trade around the end of the 31st of December, but I did trade it, and I did get some good number of pips there before the market turned around again. Okay, so that's the point I'm trying to make. I've got my Telegram group list, a link to my Telegram group at the bottom if you want to join me and still see how I do trades like this. Okay, so coming back to my MT4 platform, so we have an idea of where the market levels are, and if I was to trade this as a day trader, we'll be trading the 1-hour time frame, which is my favorite time frame for trading. Okay, so now we can see that we already had our levels marked out. Okay, so you know you're going to trade this range, assuming you saw the market going here and you decide, okay, I want to trade this down all the way down. It's come down to a significant level like we saw on the daily time frame. Market has come there, so you need to be able to anticipate what's going to happen. Now you know that this is a strong level. You begin to look for candlestick patterns, or any signs to confirm that the market is going to reverse. But the probability of the market reversing at that level is important. So I hope you're trying to get the point of what I'm trying to make here. Okay, so we'll talk about the signs of reversal maybe some other time, but I hope you're getting the drift. On the 1-hour chart, we can see now, assuming all this had not happened, this move all the way down here has not happened, what you will likely do, if I was to reduce the width of this, so you can see more of the price action. Okay, so price comes into this zone and then it pushes down and then makes a retracement. Okay, this is a very, very healthy movement. You can see prices keep making lower highs, lower highs, lower highs. So if you were to trade this anticipating that there's a level below, a level of support below, because you already marked it out from a previous level, when the market came down here previously, you marked it off and you know that's going to happen again. So for the future, let us mark out this level here and keep that as a level to watch as well. Now, is this level significant? We can see a zone of support here. Let's do the zone of support here. So I'm showing you guys how to mark up your charts for trading. So you can see zone of support here, and let's zoom out and see if that level is significant. Okay, price had actually come into this zone before, and there's been some reactions. Don't forget, like I said, it's a zone and not just a straight line, so you can see a lot of activity here. Let's zoom out a bit more so you can see any more price action. So it's probably, yeah, we can see it's also acted as resistance in the past. It's another key level, and also acted as support in the past as well. Okay, so another key level here. So basically speaking, if there are multiple touches on that line, then that acts as a significant level. 2-3 touches is usually okay. So we can begin to say, okay, we'll see what happens when price gets there. But going back to our 1-hour time frame, we can see that, okay, there is still potential for this to fall, because at the moment we are in this downtrend. So we see what happens here, and I'm going to explain to you how I'm going to trade this going forward. But you must be mindful that there's a potential for this to actually come back all the way down here if this downtrend is to continue, based on macroeconomics or other news that might move the pair. Okay, so we're looking at how you would have traded this. Now, it's important to know how you would have traded it, because this pattern is going to repeat itself over again in the future. Okay, so if we zoom back in again and you ask yourself, now, if it begins to make a downtrend, the question you're going to ask yourself to be able to anticipate is, how do I know when the retracement is over? Because if it retraces, the trend tends to continue. So after it has made this first retracement, and you see this, bullish, bearish candle, this one here, so it comes down, it pushes up, but then it doesn't go to the high level. It means it's making a lower high. So the next question you're going to ask yourself is, where is this pair likely to retrace to? So what we do, we take this level of structure here, okay? This is where it has acted as support before in the past, and ideally you're looking to see if the pair will retrace to this very point. On this occasion, it didn't really come up here a lot, but we're going to see subsequently how the other levels played out, okay? So this is a level of support as well. The pair has been to before, and then subsequently we can now see that it has come to a level of support, and then this support has now turned into resistance, okay? So you could have then placed your sell order around here, okay, and then you have a nice trade all the way down. That could have given you what, how many pips? If you took it all the way down to the next support, talking about what, 90 pips. And if you missed your entry here, you draw another line here, and you can see, basically speaking, this was another zone. This is a zone of support and this zone of resistance, okay? And you could do the same thing here again. So market structure is something you need to understand, how price moves. So if you missed your entry here again, you could have equally entered the market here. It was also a big down move all the way down here, okay? So, and now that we've come down to this very point here, we begin to ask ourselves right now, so is this trend over, or are we about to see a retracement? They say the trend is your friend until it bends in the end. So how do I know that this trend now is likely, that is losing momentum? I probably look for divergence. Is something else, again, I teach a lot in my group as well, in my Telegram group and on this channel, okay? So if you look in here, let me remove some of these lines. You already know what I mean by them, okay? What I'm trying to demonstrate, okay? So if we look here and take a trend line tool here, and we draw here, we can see, let's see, I think make that black. It was already white because it was white screen before. Okay, so you can see that the price here made a lower low, but the corresponding movement in my oscillator, it's going higher. So I know for a fact that this trend will probably be over. And where am I seeing this? On the 4-hour chart? You see on the 4-hour chart? I'll prefer, actually, to be honest with you, I prefer having divergence on the 4-hour chart. The bigger the time frame, the better, okay? So you can see that I've made, this price has made a lower low, but the oscillator has made somewhat a higher high, basically. If we even take it from, well, maybe you take it from here, if we match that to this point here, okay, we have a low, we have a lower low, but the oscillator has made a higher high. See that? It's gone higher. Let me try and stretch it so you can see, right? So that gives me the impression or the understanding that this market is about to retrace, okay? Retrace majorly. Now, because we're in a downtrend at the moment, let me see what the daily trend is. Really, 1 second. Well, it is a ranging market on the daily time frame, because the last couple of months it's been stuck in this range, basically. Okay, so probably expect a breakout, but for daily trading, this is the kind of thing you'll be expecting. Okay, so rather than doing these same steps and looking for shorts, with this divergence I've seen on the 4-hour, I'll be very, very careful with taking more sells, if you know what I mean, okay? You watch and see what the market does. But again, we already saw that this is a significant level, which we saw before. So it's possible that we are getting some support around here again, and then the price will bounce up in that it's been in a range. So you would have had a very, very good trade if you took this all the way down from here. That would have been over 180 pips if you have been following this pair. And I think something also important is, you try and follow just one pair or one asset, then you can understand the behavior of the pair, mark out your support and resistance, and see how that is going to work. Now, let me give you another example of how you could have traded the Aussie dollar as well, just using the same principle of a pair being an uptrend. Let me take this out and show you again of how market structure repeats itself. So that was NZD-JPY. Was that USD-JPY? I'm going to use AUD-USD to demonstrate this same principle as well. Okay. So on the daily chart, we already mapped out the lines here as well. As you can see, this is where the price went to the last time, and now it also came here as well. So we marked off this level, okay, as an area of interest, because I acted as support here no, sorry, resistance here, support, 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 support. That's a very strong zone we should pay attention to. And see, guess what happens? Price came here and then reversed. Now I use the stochastic as a means of knowing when retracements are over, or timing my entries. Is very, very good for timing, and also good for spotting divergences as well. Okay, so we already had this level marked out in our chart anyway previously, because acted as support before, and then it now become resistance here. And then on the 4-hour charts, you are asking yourself, so when it gets to this zone here, and then it starts to retrace, because we're in a general uptrend, as you can see, we're in an uptrend right here. Okay, and then let's see that. So we're in an uptrend. Let me make that okay. So I think I need to round up this video now. I think I've made my point. So we're in an uptrend. That is very clear with this trend line here. Okay, so you're asking yourself, where is this likely to retrace to, being when an uptrend? Again, you're going to use a previous level. You mark that out on your chart, and let's use this one. Tired of trying to change it. Let's use that one. Okay, so assuming you had used that to mark out your chart previously to have an idea of where this is likely to retrace to, right? So that's how you anticipate, okay, if I was to enter a short here, I would take my profit around here, because this is a previous level where market has actually reacted. And this is what we now call resistance, SR flip. Resistance to support flips. This was resistance and now turns to support. It's something you need to be very, very mindful when you're trading. Forex, just be very aware that market has a memory, and market will always revisit areas it has been before, either as support or resistance. And if you take a Fibonacci retracement tool onto here, this should be around maybe what, 50%. You see, bang on 50%. Okay, so all these things, they're not coincidental. The market has a structure, and if you understand that structure, so that was a 50% retracement that has also coincided with a previous area of resistance. And then we can see our stochastic is now oversold, telling us that the market reversal is due. We've seen a bounce up, and now we have a retracement. So what I'm expecting is to have a retest of this level here. I wouldn't just jump into a buy on here, but even it's very likely because we're in an uptrend. But after having one to a couple of waves up, I'll be very careful with that. Okay, but at the moment there could be the chance of a short-term bounce up here. There are many confirmatory factors. Okay, so guys, I hope this has made some sense to you guys. Just trying to show you exactly how you're going to trade the trend, how you're going to mark up your charts. And yeah, this video has gone up for a long time, but it's something you might need to rewatch over and over again, as I know it's going to help your trading. Okay, so if you're watching on YouTube, don't forget to like and subscribe to my channel. I make free videos like this to help you with your forex trading. I'm just an ordinary guy who's learned how to trade, and there's nothing really complex. You can make your trading simple. I would appreciate it if you like the video. Subscribe to my channel so you can get this kind of videos when I make them, and also look in the description below for a few more tips on how to trade. You can keep your trading really simple. If you have any questions about how you're going to trade forex, I'm easily approachable in my Telegram group, or you can catch me on Facebook or follow me on Instagram, and yeah, we'll be able to see what we can do for you. So it's a bit of a long-winded video, but I've really touched on some very important concepts today, mainly how to mark up your charts, how to spot areas of support and resistance, which are very important because market tends to come back to these levels as well. Okay, so it's Alice saying, any questions, leave in the comments below, and I'll see you in my next video. Take care and have a good week trading. Okay.